Welcome to Bears in Exile. Today is September 20th, and it is time for the market overview, looking at the Dow, SPX, VIX, XOY, TNA, UUP, FXE, GLD, and SLV. Woo! All right. Well, we had another one of those days, and just all over the place. It was massively crazy. We did not get the NDEs as we were expecting. We had part two of the Greek conference call today. It did not pan out. They've pushed that into the weekend and next week, so there's no resolution to that, unfortunately. Beyond that, we also did not have the Palestinian vote in the UN. They're still playing games, footsing around, trying to figure out if they're actually going to do a vote or not, playing politics. So none of those bore fruit. And in addition to that, the overnight downgrade of Italy had completely the opposite effect. We spiked up huge in the morning, and it wasn't until midday that it turned around. Here we are with the Dow. You can see the peak. It was a very, very promising move. It was extremely surprising, but it did turn around. And by the end of the day, we had an inverse hammer. Almost a gravestone doji, but I'll just call it a inverse hammer. Beyond that, what do we see? Well, we said that the short-term moving averages were not likely to produce a strong march into the bar, and that is holding true for today. So they're still resting at the lower point of the bar, waiting to go do something with themselves. Interesting that we have a hammer and then inverse hammer. Not a good sign in my opinion, but we'll see how that plays out. Uptick on CCI, downtick on the fast stochastic, uptick on the slow stochastic, uptick on the 14-day RSI moving average, side tick on the RSI, slight downtick on the MACD histogram, uptick on the MACD. Very, very mixed bag. So, let's look at something else. Black box number one. I'll pull this sucker out and see what it says. Well, as we can see, it bounced off of the lower trend. It came up. It came very close to the upper trend. And now we have to see if it's going to actually go up and do a touch of it, which would be 11,600. Or if we are going to reverse and do the converse, which is to test the lower part of it, which would be right at 11,100. You can see that we have exited the extreme and the major trends at the moment, and these do shift around as more information is available, but this is what they're telling us at the moment, that we have left those. Now, if we were to have some disgusting crash, which I'm not expecting a real major move down until sometime in October, which will give them the reason for QE3, and going down to threaten the 10K area. I've maintained that for a very long time, that is the magic number, and that does somewhat correlate with the major and the extreme trends currently. But we'll see. We could pop out of the top of the minor trend on the upside, and then who knows, maybe even go up for a test of the 200-day moving average at 12K, and then see what these readings are doing. Maybe they would loop up and give us a different reading at some point in the future. But for the moment, that is what they are saying. Going to the 60-minute time frame, we can see that over the past week we had a nice run. It went through the bearish bar, flipped it, turned it bullish, came down for a test, bounced off it, totally healthy, guppy entry, and then it appears to be coming down for another retest of that bar, which is getting further expansion in the 60-minute time period. However, our secondaries do not look healthy. Well, they do corroborate the idea of it coming down for a retest of this bar. Downtick on the CCI, downtick on the slow stochastic, the fast stochastic, the 14-day RSI moving average, the RSI, getting the bearish cross on the MACD, and sloping down on the histogram. Also resolving this negative divergence we have in the histogram, and we got further reading on that today. So this is not resolved. SPX is going to be more of the same, except for we do have a gravestone doji right here. It does not have a tail underneath it whatsoever. It is perfectly formed, and definitely gives weight to these short-term moving averages, which we have been watching very carefully, very closely. We are right in the middle of this range we've been talking about, this bear flag or this channel, which is for you to decide what it is. CCI ticking up, getting high, rolling over of the fast stochastic, slow stochastic still pointing up, 14-day RSI moving average still pointing up, down tick on the RSI, slight downtick on the MACD histogram, uptick on the MACD itself. Based upon the appearance of the short-term moving averages, I would expect this at least to go back and turn into a flat line of some sort. You can see this in the past. It comes up and makes a little bubbly looking thing, comes down, forms a flat line, gathers its strength, and goes on up again. So is that what's going to happen this time? Yeah, nobody knows. And certainly the NDE tomorrow of the Fed, the most important NDE of the week, is going to push it one way or the other. As some people are saying, this is a head and shoulders, shoulder, head, shoulder, neckline down here, slight slope to it. Maybe that's true. If we were to bust the major price consensus level, certainly getting down to where that sloping neckline would be entirely doable. It would be lining up with the lower Bollinger Band, and then we'll see what happens at that point. But it's way too early for anything like that. Moving right along to TNA, we pointed out in the daily running thread today in real time early on that the Dow and the SPX were not tracking TNA. TNA has been a laggard. Normally it leads, and today it led. This sucker was down well before SPX and the Dow were, and it foretold the pullback in the second half of the day. So that was nice. It was down almost 5%, which is a real good move down. We don't have any shadow on the lower part of it. We are close to the major price consensus level. Short-term moving averages are in a flat line. They are pointed down. Notice the pincer of the Bollinger Bands. These are constricting, indicating that a move of some significance is coming soon. And we have a downtick on CCI, slow stochastic, side tick on the, downtick on the fast stochastic, side tick on the slow stochastic, slight uptick on the 14-day RSI moving average, downtick on the RSI, downtick on the MACD histogram, slight uptick on the MACD. Looking at the 60-minute time frame for divergences, the down move pretty much is shows that the corrective move is underway, so there isn't really anything that stands out to say that it's in dire need. Certainly the time frames don't look good. And if we look at black box number 1, we can see that the extreme and the major trends are still pointed down. We have left them similar to the Dow. We are in the middle of the minor trend, right in the center of it. If we go down to test the bottom of it and re-enter the major trend, we're looking at 38. Also correlates with the lower Bollinger Band. If the Fed news is met positively, we could be going up to 50. Okay. UUP. Alright, we said last night that short-term moving averages were pointing up. We were above the 200-day moving average. It did pierce it today, but it did close above it, and we're pretty much right on edge with where we closed yesterday. Actually, we are. It had zero change. Long-term moving averages getting more separation, and still a mixed bag with all of our secondaries. MACD histogram still sloping down. MACD itself still pointing up, getting a curve over on the RSI, uptick on the fast stochastic, 14-day RSI moving average, side tick on the slow stochastic, and slight downtick on the CCI. And it was a hammer candle today. Does that mean that this is the top of the range and it's going to go down? Maybe. Is this an indication that it's the bottom of a range since it is above the 200-day moving average? Maybe. This is a mixed bag, and we just don't have enough information. I don't know. FXE, almost a doji star, almost a miniature inverse hammer. Short-term moving averages pointing down. We're starting to get across on the middle Bollinger Band. Of course, more separation in the long-term moving averages. 14-day RSI moving average clicking down. Side tick on the slow stochastic, down tick on the fast stochastic, uptick on the CCI, side tick on the RSI, uptick on the histogram, down tick on the MACD. Ugly mixed bag. So, like in the last video, I'm going with the short-term moving averages, which are pointing down, and the fact that we are below the 200-day moving average. Alright, gold. Gold. We had that ugly red bearish engulfing candle yesterday. We said that the short-term moving averages were going to sit on the bar, which was natural and expected. We almost had the touch yesterday of the major price consensus level. It has backed away from that today. Very nice. We are not looking for a break of the major price consensus level. So this looks good. It put itself right back on top of the bar to sit, and I guess it'll just simmer there until it's time for it to go higher. And some chop is to be expected and normal. If it wants to sit here for a while, that's completely fine. Yes, it can erode the bar, but that is a strong bar. Uptick on the CCI, downtick on the 14-day RSI moving average, uptick on the fast stochastic, slight downtick on the slow stochastic, getting into oversold, downtick on the RSI, downtick on the MACD, uptick on the MACD histogram. Just waiting for NDEs to have their effect. SLV also a nice little up move today after we had our hammer yesterday. Closing slightly above the real body of yesterday. We said that it would appear that the short-term moving averages are going into the bar. They will sit there, erode the bar, and turn it into a double flat line. We don't like double flat lines, but certainly today's move seems to point in that direction. So there we are. Uptick on the CCI, uptick on the fast stochastic, downtick on the slow stochastic, slight down on the 14-day RSI moving average, slight downtick on the RSI, uptick on the histogram, down, is that a downtick? Yes, slight downtick on the MACD. So all in all, I would say not bad, and that our calls seem to be working out pretty well. Actually, maybe a little bit better than pretty well. But there it is. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. And we'll be watching the fireworks tomorrow.